Thanks for tuning into the weekly wrap this Friday the 18th of September. I'm Jessica Amir, a market analyst with Bell Direct. Well, the downward spell was broken this week with investors waving their buying wand, sending stocks higher for the first time in 6 weeks, up 0.4% as at close of trade Thursday. Sentiment was high from the get-go this week as we saw US blue chip stocks rise about 0.9% as investors in the US snapped up low-hanging fruit and played to the theme that the global economy is expected to only improve from here. Sparking interest locally, new home sales surprisingly rose 3.6% in August when the market expected a fall. That helped building material stocks like Brickworks, CSR and Boral rally. Now, all three of those stocks are backed by UBS as buys, given the economy is likely to rebound in the fourth quarter of this year. And secondly, this week we saw the RBA report an uptick in applications for home loans. That's the chart on the left, a trend that has been growing despite COVID-19. However, what's noteworthy is that people have been spending more of their disposable income, paying down their mortgage principals, and have been paying less on interest. That's the chart that you can see on the right. As for how the ASX sectors behaved, well, the underperforming local property sector got a kick, while miners got a kick too after the gold price shone, rising to a 3-week high before it cooled its heels. As for standout stocks, mining services company Perenti, PRN, rose the most in the ASX 200, up 13%, hitting a 3-month high after winning an 18-month, $140 million contract extension with one of the world's biggest underground mining companies called Barminco. Now, Perenti also confirmed it's got an $8.8 billion tender pipeline and $540 million in underground contracts bagged this financial year. PRN's earnings margin are above its peers, and PRN also has one of the best debt to equity ratios in the industry as well. Now, before this week's rally, consensus was already bullish for PRN. UBS has PRN as a buy with a 190 target, implying 47% upside. Other front-running stocks this week included car dealership giant Eagers Automotive, APE, up 11%, and gold stocks like Northern Star, Perseus, Silver Lake as well. Moving to what to consider going forward. Well, this week we learnt that Aussie employment surprisingly rose and improved marginally right in the thick of lockdowns, with 111,000 folks returning to work, far outpacing the 35,000 jobs that were expected to be lost. So who went back to work? Well, part-time workers, a large amount of self-employed and sole traders, and more women returned to work than men. Now, this sensational lift in employment saw Australia's unemployment rate fall from 7.5%, a 22-year high, down to 6.8% in August, a stunning victory given the market was expecting unemployment to worsen. Unsurprisingly, Victoria, the outlier, saw employment worsen as August stage 4 lockdowns kicked in. But Victorian cases are trending lower on a 7-day average, and cases are likely to continue to fall given how severe lockdowns are in Victoria compared to, say, Western Europe. Home restrictions and curfews likely to end from the 26th of October, and life could start to look a lot more normal from the 23rd of November. So what does that mean when thinking about your investments? Well, banking stocks are likely to remain under pressure. But with Victoria employment likely to improve after November, you could start to think about that private consumption makes up 60% of the economy, and think about the stay-at-home stocks that could benefit from now to then and thereafter. 2 stocks to consider: Aristocrat and AX1. Aristocrat was upgraded by Credit Suisse to an outperform with a $30 target. The broker says ALL has built critical systems for the future in online gambling, with strong growth already seen in the US. Now, Credit Suisse upgraded its long-term cash net profit growth, and if you looked at Trading Central's chart on Bell Direct, there are more bullish signals than bearish, indicating its shares could rally, supporting Credit Suisse's buy recommendation for ALL. Secondly, you could look at Accent AX1. It's kicked off the financial year quite strongly. It owns Hype, Platypus, Vans, Skechers, etc. And sales are up 70% on last year. Now, and that's amid the rise of casual shoe sales. AX1 also looks cheap as it's trading about 14 times earnings, and it's due to roll out new stores and online brands. AX1, backed by Bell Potter as a buy, $1.85 target. Looking at AX1's chart on Trading Central, there's also a lot of bullish signals suggesting AX1 shares could hit $225 to $240 in over 9 months. To access more of the technical analysis trends that we've spoken about, head to Bell Direct, Research and Tools, then click Technical Insight. So there's plenty to consider. From all of us here at Bell Direct, thanks for your company, happy trading and stay safe.